So as the Israel-Hamas war intensifies, we still have no House Speaker, and now we have a 10-year Treasury over 5%, which to me is pretty interesting because when we think about all the political tension that's taking place in the market now dipping on a day like today, you would think that yields would actually be collapsing and that people would be flocking to safety. And that is just not the case, which is making me wonder who's selling these treasuries. Is it the Federal Reserve dumping its balance sheet? Is it just the lack of liquidity that's in the market and nobody's willing to buy anything right now? But I find this behavior to be very, very interesting. And normally on a day like this, you would normally see yields kind of dive here. With the 10-year Treasury now pushing 5%, it's definitely bringing a lot of problems into the market here. And I recently did a video on companies like Lockheed Martin and Raytheon Technology, which I did take a position in and recently sold out of, as the move has been pretty substantial over the last 5-6 trading days. It was a nice complement to the portfolio that I needed, and it was something that I was definitely overlooking from an investment strategy here. When we think about the macro backdrop of uncertainty, the end of the economic cycle, these tend to perform well. These are definitely defensive type stocks. And the other stocks we mentioned is actually consumer staples, who are now starting to show a bid. As I stated before, even though we have all these new diet pills hitting the market here soon, and maybe it puts a small dent in some of these consumer staples, overall, guys, we're still going to need food. We're still going to need water. We're still going to need shelter. We're not going to be living off of just diet pills. For consumer staples has been drastically overdone, and it's very rare that I recommend consumer staples, but at this point in time, there's some really good consumer staple stocks out there that I think are pretty cheap. Now, in my last video, I did state that the technicals were rolling over, and that's exactly what's happening here. We're getting that M pattern that we've talked about before. We had an M pattern over here, another M pattern here, and now we're formulating another M pattern here. And with this formulation, what are we seeing? Well, we're trading with lower lows and lower highs, which is telling me that the market breadth is starting to weaken here. And there's not a tremendous amount of conviction for equities right now. And we're starting to see that behavior pile in. Now, the odd thing is that in my opinion, the bottom half of the S&P 500 is in recessionary type trading categories here, where they are in bear markets. And the top 10 stocks have really been holding this market up, making it feel like it's not that bad. But if you own individual stocks and have no exposure to the top 10 names, you're probably massively underperforming the market. Yes, I still believe that there is an end of year Santa Claus rally on the table, but I still think we're in a high risk period here with uncertainty with war. We have no House Speaker. Consumer confidence is definitely weakening. And we have a presidential election. Oh, by the way, there is still a war going on with Russia and Ukraine, and China is a wild card. But other than that, everything is just fine. So where do I believe the market is heading? Well, we're trading below the 50-day moving average, and I technically believe we're going to retest the 200-day moving average. The question is, are we going to hold the 200-day moving average? If we hold the 200-day moving average, the amount of liquidity on the sidelines and coming to a seasonality aspect of the market, I definitely think there's opportunity for a rally, but how bad over the next few weeks is it going to be here? And that's truly the wild card, and we're taking it day by day. But what we have formulating right now is a 2 count to the downside on the Tom DeMarks, trading under the 50-day moving average, trading in below the middle of the cloud, and starting to approach the 200-day moving average. So for me, this is all kind of bearish to neutral looking. I wouldn't really buy any sort of big dips here right now until we find a bottom here very soon, which I do think is going to happen over the next few weeks. Now, we're at a critical point of 432, in my opinion, on the S&P 500, which has been a good support resistance line. From there, I do think we're going to possibly break below the 200-day moving average and settle in right around 4150 to 4200 on the S&P 500. That's going to truly test investors here. Are we going to see algorithm pick back up and start buying? Are we going to see investors jump in and start buying the dip? And where are yields going to be when this happens? Because if yields are still spiking, I find this dynamic to be very, very interesting, because if we're having these sell-offs, if we're having all these political tensions, it's baffling that yields are still spiking on this and that there is not a flock to safety globally to US Treasuries. The other thing we want to watch is HYG and credit spreads, which then could blow out credit spreads. So we want to pay attention to that as well. If those things start breaking, then financial institutes are going to have massive problems, and we're going to start seeing things that we've never really seen before. So as I stated, this is a day-by-day technical analysis. Right now, I do believe that we're going to settle in right around 4,200. We're probably going to test that 200-day moving average over the next week or so. Could even be as soon as the end of this week. From there, that is going to be the true test of this market, and if we're going to have some sort of end-of-year rally. There's absolutely enough liquidity on the sidelines, but does that liquidity want to jump into uncertain times, or are we going to start seeing yields actually find a top here? As always, guys, appreciate your time. I just want to give you an update, and we will see you in the next one. Peace.